Take the next chapter called acquisition of business. Acquisition, which means purchase of business, in the sense purchase of the business. See, a joint stock company is purchasing the business of a proprietary concern, purchasing the business of a partnership firm. That is called acquisition of business. Two things we should keep in mind. One, when the case of acquisition of business, the existing business will be closed, liquidated, dissolved, and the activities will be continued in the new business, that is in the purchasing company. And purchasing company need not be only a newly started company, may be a existing business, existing company. So for example, to say A and Co is purchased by A Limited, then A and Co has to close the business. After the acquisition, they will not have any existence, and A Limited will continue the business of A and Co. And in this case, when we are purchasing a product, normally when we are purchasing anything, we are required to pay the amount. Likewise, in case of acquisition, if the business is purchased by the company, then the company has to pay the amount, that is called purchase price, or technically called as purchase consideration. In this purchase consideration, it is calculated under two methods. One is lump sum basis. That is based on the mutual negotiation agreement. That company, that business is purchased for 10 lakhs, 12 lakhs, 15 lakhs, 1 crore, like that. And another one is asset method. What the assets taken over by the purchasing company minus what are the liabilities accepted bared by the purchasing company, balance is called as the purchase consideration. This is called asset basis. So any one method we have to follow. And another one is payment method. Payment method, in the sense it is similar to the lump sum basis. Straight away the amount is given and it is paid in the form of shares or bank. Then purchase price should be calculated on the notified methods. And how you are discharging the purchase price, that is another one aspect we should know. I am purchasing the business by paying 1 lakh rupees, but how that 1 lakh is paid, that is not the meaning of just paying the amount of cash. It is paid in the form of shares and paid in the form of the amount cash, that is bank. Then two sets of entries we have to pass in purchase acquisition of business. One, when we are purchasing the business, the vendor company, that is the seller, has to close the books. So closing entries. With the help of the closing entries, we can able to ascertain the profit or loss on that sale of business, that is in acquisition, that is through that realization account. Then another one, vendor will close the books of accounts, then purchaser has to start the books of accounts, that is purchase opening entries should be prepared in the books of purchasing company. So what is the meaning? Vendor has to discontinue the books, purchaser has to continue the books. And in case of that purchasing company, from that we can able to prepare the balance sheet. So you should be clear. When you are asked to calculate the profit, then you have to close the books of account. When you are asked to prepare the balance sheet, then you should prepare the purchasing company opening entries, that is in the books of a purchasing company. Then what entries should be passed in purchasing company, in the books of purchasing company? First, number one, already we have prepared we have calculated we have ascertained the purchase price. So first entry is business purchase account debtor to vendor company. Second one, asset account debtor to business purchase to liabilities. Here you should know one thing. Here asset, in the sense what are the assets taken over by the purchasing company. It is not mandatory all the assets are supposed to be taken over. It is not mandatory all the liabilities are supposed to be taken over. And moreover, liability accepted by the purchasing company. Liability, in the sense creditors, bills payable, and overdraft, any other liabilities, third party liabilities, only we have to consider for this liability. And please note it down, we should not take the capital reserves and surplus for this purpose. Why? Because capital and reserves and surplus are called as shareholders funds, and that should be settled with the owner of the business.